And in international news, Apple overtook Google as the world's most valuable brand, ending a 4-year reign by the internet search giant, according to a study by global brands agency Millward Brown. The iPhone and iPad maker's brand is worth more than $153 billion, almost half Apple's market capitalization, it says in the annual study of the world's top 100 brands. Apple's attention to detail, along with an increasing presence of its gadgets in corporate environments, have allowed it to behave like a luxury brand would do, where the higher the price for the product, the more it seems to reinforce the desire. In the survey, Google came in at number 2, IBM at number 3, McDonald's is number 4, and Microsoft is number 5. The world's biggest miner, BHP Billiton, said the global economy is fragile with persistent unemployment and inflation the twin threats. BHP's chairman, Jack Nasser, said the medium-term outlook is challenging as monetary and fiscal tightening and economic restructuring take hold around the world. However, the shift towards Asia remains very much intact, and that Australia and BHP will be able to manage this transition well. Australia is the world's biggest exporter of iron ore and coal, and its biggest miners, to which BHP belongs, have placed big bets on the commodities boom in Asia, led by China. Global sales in luxury goods are expected to reach record highs this year, led by a strong demand rebound in the US, China, and in Europe. Consultancy firm Bain & Company has raised its 2011 growth forecast for the luxury market. It previously saw a 3 to 5% growth range and now predicts an 8% rise in global sales after various luxury brands have beat market expectations. Increased tourist numbers into Europe as well as a pickup in sales in the US have boosted the pace of the luxury goods market recovery. China is expected to become the largest consumer of high-end goods over the next 5 years. Currently, it is number 2 behind the US. Luxury sales in China rose 30% last year and are expected to grow by 25% this year. Meanwhile, China's direct investments in the US will be the hottest topic in the coming Sino-US talks, according to experts. Recent statistics show that in 2010, the US received investments worth more than $5 billion from China, which created 10,000 jobs. Experts predict that China's direct investments in the US will grow rapidly in the coming 10 years. Also, they believe that the restructuring which is taking place both in China and the US will make their economies more dependent on each other.
I think that the capacity of China to invest directly in the United States will be a very important dimension of our relationship over the coming 10 years. My own feeling is that China is likely, by the year 2020, to have directly invested abroad roughly $2 trillion US. It's a huge amount of money.
Before we go, here's a quick overview of the Asian equity indices as well as the oil and currency markets. And after that, Laura Buchwald is back with the news.